And that works the same in both directions. So these are puts. So now a put is what people bet on typically when they think a stock is going to go down, because a put lets you sell a stock to somebody at a certain price for a certain period of time. So this is the same expiration. We've only got about 2 weeks of time, and we've got the stock right now is at 118.30, and the 118 put is actually priced quite a bit because there's a really good possibility that this stock could turn over and trade lower and go through that. I mean, heck, it's only 30 cents off of the strike price, so I mean that could happen in one day. It could happen several times in one day. Now you go down here to the 116 strike, and that's all time value. That's $1.18. You go a little further away, that's a 75 at the 114 strike. You go down here to the 112, and that's 48 cents, and the 110 is 30 cents. Once again, the further you get away, the cheaper these options become, because there's less probability that the stock will get there. Now, one of the things that you have to understand about this, and we're looking just at a frozen shot in time here, but the markets are very dynamic. If you watch charts, if you have real-time charting, if you're in the markets every day and you're looking at them, you know that stocks are jumping around all the time. There's a lot of movement on some days. And as this stock goes up, all those calls we looked at increase in value and the puts decrease in value. Why? Because as the stock goes up, there's less probability that these puts will become valuable down the road. Same thing the other direction. As the stock goes down, all these calls decrease in value and the puts increase in value. So this is a very dynamic thing that you can watch on a dynamically updated options chain. It's actually really fun. And this is one of the reasons that people trade speculative options in the first place, because there's so much change in the price of the options with a little bit of movement of the stock. You know, people figure they can go in there and they can buy a cheap option, and in a very short time it'll turn into a valuable option. So as you can see how options are priced, you can really see where people would get that idea. In addition to how far away you are from the actual stock price, the further you go out in time, the more expensive the options become, because the probability goes up that they will become in the money. So here's an example. So here's the stock is still we're at that 118.30, and it can go up or it can go down. But on this particular case, with where the stock is now compared to expiration right over here, we've only got about 2 weeks of time for some kind of an event to occur. If we look at this strike price all the way out here, this is another 4 weeks. So when you're selling options or buying options way out here, we've got a total of 6 weeks for something to happen. So at the exact same strike price, because there's a higher probability, because we have more time for something to happen, these options are going to be more money. So in this case, at this 118 strike, the puts are $1.82, just 2 weeks out, but at 6 weeks out, they're $3.97. And you can see this commiserate difference at every different price level. 118 goes to $3.20 at the 116 strike, 75 cents goes to $2.59, 48 cents goes to $2.09, and 30 cents goes to $1.68. And if I could show you strikes further out, further down, you know, several months away, they would be even more expensive still. So we're still back to that. What is the volatility of the stock? How much does it move around? And what is the probability that a certain strike is going to be hit and overrun by the stock? And that's what prices the time portion of the option. Obviously, the intrinsic value is only the difference between whatever the strike price is and the option. And when the options become out of the money, the only thing that creates value is that time value. So once again, that's a really important thing to know, is this concept of time value of an option.
To watch the next video on how to cash flow the stock market for fun and profits, subscribe to this channel for free by clicking the button below.